Welcome back. You're with us on Markets Today. Well, we run through three of the headlines. Let's get you through the remaining two. The fourth headline today: Adani Port surge closed around 5% on the back of an operational update. Vivek Iyer joins us to run us through all of those details. Well, Vivek, take us through this business update. It seems the street liked it quite a bit.
Well, absolutely. When you're talking about Adani Ports, yesterday, the entire pack saw quite a bit of a sell-off, and Adani Ports wasn't an exception. In fact, the stock was down almost 4.5% in the session yesterday. Today, it's recouped all of the losses. In fact, trading above yesterday's, dip for yesterday's high as well. Now, when you're talking about what exactly has transpired, yesterday the company came out with an operational update, and when you're talking about this particular update, some strong operational performance coming through as far as the month of September is concerned in terms of the volumes handled as far as the ports are concerned. So the company recorded a 13% year-on-year growth as far as the cargo volumes were concerned for September 2022, and the company says that this is in line with the average monthly run rate that they had earlier guided for. They were earlier guiding for 350 to 360 million metric tons. Now, when you're talking about the first 6 months of FY23, the company has managed almost 177 million metric tons of cargo, which is a gain of almost 11% on a year-on-year basis. So now this involves both the East Coast as well as the West Coast. The East Coast volumes were up almost 13%, led by the Krishnapatnam port, the Gangavaram port, as well as the Kattupalli and Ennore port combined. On the other hand, the West Coast volumes, which were up 10%, were aided by Mundra, Dahej, Tuna, as well as the Goa ports.
Got that. Thanks for that, Vivek. Well, moving on then, let's shift focus to the auto space. India's largest tractor manufacturer, that's Mahindra & Mahindra, has raised the industry guidance post strong sales in September. The company has raised its growth guidance for tractors from around 3 to around 5% earlier to the upper band, that's 5% for FY23. Similarly, Escorts Kubota expects the industry to grow by around 5 to around 7% for FY23. Sonia Shenoy, she's standing by to run us through all of those details. Sonia?
The big story is this, right? Tractor makers, because of very strong sales in September, have gone ahead and raised their full-year growth guidance for the industry. M&M has raised the tractor growth guidance from 3 to 5% earlier to 5% plus now, while Escorts has raised the guidance. They said that the industry will grow 5 to 7% year-on-year in FY23. Now, the growth rates have been picking up over the last many months. M&M has reported its highest ever tractor sales in the month of September, and they said that the tractor segment market share has picked up and will stay steady at about 40% plus. But just take a look at the growth rates for both M&M and Escorts over the last 4 months. Now, in June and July, M&M saw a degrowth of 13 and 14% respectively. It improved to a growth of 1% and then 20% in September. Similar is the case for Escorts. In June and July, a degrowth over there, and then 7.5% in August, followed by almost 39% in September. So what are the reasons for an improvement in tractor demand? One, of course, is the onset of the early festive season, so the year-on-year numbers look pretty good. Next, you have the above normal monsoon, which has led to an improved reservoir level and hence improved crop production. The crop prices are also holding quite firm, and that has led to more demand, and the Kharif crop harvesting will start soon. Hence, the order book is looking pretty good for many of these companies. But let's not forget that M&M has been one of the strongest stocks. It's rallied 50% this year already, while Escorts Kubota as well has seen about an 11% rally. But yes, raising the tractor industry guidance is the big story. In fact, let's listen into the key takeaways that we had from our conversations with both M&M and Escorts.
In the latest estimates on growth released by TMA, which is Tractors and Mechanization Association, we have come up with a 5% plus growth number there. So I think that 3 to 5 band is now 5% plus in that sense. I think all that phantom demand has been serviced well by us and other players in the industry. How I would see it is that interest rate and upcycle is always a dampener for any industry that you would say, especially the industry like auto and tractors, which are like heavily financed.
The first 6 months of this fiscal, the industry has already grown more than 10% now. So even if you assume a flat industry in the balance of the year, you will still grow more than 5%. So obviously the guidance, I think what the players are giving, I think is right. So we have been saying it will be mid-single digit growth, so it can be anywhere between 5 to 7% now.
Well, Angel One surged more than 10% in trade today on the back of a strong showing in the second quarter business update. Sylvie is standing by to run us through a quick analysis on that front. Surbhi?
Their gross client acquisition saw a marginal decline and is at 3.9 lakhs versus 4.5 lakhs in the month of August. Their total client base, however, grew by 3.4% on a month-on-month basis and now is at 1.16 crores. Their average daily turnover saw a growth of 11% and the number of orders were up nearly 25% at 9 crores. For the F&O segment, their market share remained constant, but commodity segment, that's where they gained market share of nearly 170 basis point and is now at 53%.
Okay, all right, got that, Surbhi. Thanks so much for that. Well, Avenue Supermarts released its second quarter business update, posting record revenue collection in excess of 10,000 crore rupees. But Marico's second quarter business update indicated low single-digit growth in India. Mangalam is standing by to fill us in with a quick analysis on both those two stocks. Mangalam?
Well, like you said, Avenue Supermarts is doing well in today's trading session on the back of its second quarter updates. The important part is that the revenues have grown both year-on-year as well as quarter-on-quarter, 36% jump year-on-year, taking the revenues upwards of 10,300 crores for the first time, crossing the 10,000 crore mark on a standalone basis, a 6% jump quarter-on-quarter, and it is a record quarterly revenue that the company has reported. Importantly, they've also added 8 stores, and this over and above the 10 stores that they've added in the first quarter itself. So first half of this year, 18 stores have been added, on track to achieve the 40 to 50 stores that the analysts are factoring in for this year itself. And the important part is that the last 3 years, which are the pandemic-led years, the company added almost 30% of its store strength, almost 118 odd stores. So that's telling you that going forward, hoping that there is no pandemic-led distraction, these stores will provide further headroom for growth. The reason why the stock, however, is just limited in its gains is because valuations have always been a bone of contention for Avenue Supermarts, which is why, while it's trading in the green, it is off its 52-week high and currently just holding about in the green itself by about 1%.
Okay, thanks, Mangalam, for that. Well, that brings us to the fifth headline today. The rupee gained more than 30 paise against the dollar. The Indian currency remains above that 81 odd mark against the dollar. Keep in mind the greenback, it did weaken a little bit against most currencies after the strong run-up we have seen in the last few weeks. Well, the insurance sector is prepping itself for a major reform. The insurance regulator is set to operationalize Bima Sugam, an interface where all life and general insurance policies will be listed. How would it work? Well, Yash Jain is standing by to tell us exactly that. Yash.
The two-letter word Bima Sugam could actually prove to be the biggest reform in the insurance sector in the days to come. The insurance regulator has asked insurance companies to operationalize Bima Sugam by January 2023. But what is Bima Sugam? Think of it as an Amazon-like platform where all life and general insurance policies will be listed. Bima Sugam will be responsible for sale, servicing and claims coming from these insurance policies. Who can buy insurance policies from Bima Sugam? Aggregators like Policy Bazaar, brokers, banks, insurance agents act as facilitators or bridge in terms of selling insurance policies through Bima Sugam to individuals. What's the best part? You as an individual can also buy your life, motor or health insurance policy through Bima Sugam. Now, who gets the funds to start Bima Sugam and who owns this platform? Bima Sugam will need approximately 85 crore rupees as initial capital. Insurance companies are expected to be major shareholders of this insurance platform. So initially, some general insurance companies will hold about 30% stake in Bima Sugam and another 30% will be held by some life insurance companies. A list of some of these general and life insurance companies you'd be able to see on your screen. Now, as more funds are required for the operations of Bima Sugam, more insurance companies will be roped in as investors. Now, the most important part, what's in it for you, me and many other policy holders? Bima Sugam is expected to significantly reduce commission paid by insurance companies. How? Let's look at life insurance sector. Life insurance companies pay around 21 to 45% commission on the sale of their policies depending on the policy term. Assuming that an individual buys a 10-year insurance saving policy, if the premium charged on this policy is about 100 rupees, then the commission included in this 100 rupees would be around 30 rupees, which would be paid by the life insurance company to the insurance agent, aggregator or the broker. This would leave the life insurance company with just 70 rupees to invest and give returns to the policyholder as his policy matures. Now the commission on Bima Sugam could come down to just about 5% as compared to the earlier 30%, leaving the insurance company with much larger sum to invest on behalf of the policyholder. On a term insurance policy, with the same calculation, straight discount could be given on the premium to the same policyholder. Now let's look at the general insurance space. If on a motor or a health insurance policy, a general insurance company pays a total commission of 19%, Bima Sugam could bring down that commission to just about 5%. What could that look like? If the motor or the health insurance policy through an agent, broker or an aggregator comes to a premium of about 100 rupees, then the same policy through Bima Sugam would actually come to you at a premium of just about 85 rupees.
Got that, Yash. Thanks so much for putting together that interesting piece. Well, we'll run out of time, so we'll wrap up on this edition of Markets Today. Thanks so much for watching.